So you're thinking about moving to Las Vegas, Nevada? And you're interested in purchasing a home, but you keep hearing a lot of noise around the volatility of the Las Vegas housing market. Should you buy now or should you wait? Well, then this video is for you because we are going to address 4 myths around the real estate market here in Las Vegas. And towards the end of this video, I will share with you an update on where interest rates are potentially headed. So let's get after it right now. Hi, my name is Mark Pepe. If this is your first time to the channel, make sure you subscribe below and tap the bell for notifications so you can be the first to learn about the current market here in Las Vegas, with so much evolving almost daily. We are passionate about removing the stress of relocating to a completely new city and state. If you're thinking about making that move, whether it be 9 days or 9 months, feel free to give us a call, text, or email. All that information is in the description below. You know, the Las Vegas housing market is often subject of much discussion and speculation. With its dynamic nature, the market attracts attention from potential homebuyers, investors, and industry experts alike. However, amidst all the talk, several myths persist, clouding the reality of the market's current state. So, let's address and debunk 4 common myths. Number 1 is the Las Vegas housing market is on the verge of a crash. The reality is, despite fears fueled by past experiences, the Las Vegas housing market is not on the brink of a crash, and several factors contribute to the stability. There is a strong economic fundamentals. Unlike the pre-2008 period, the current economic indicators for Las Vegas are robust. The city has made significant strides in diversifying its economy beyond tourism and gaming, with growth in sectors like technology, healthcare, and logistics, just to name a few. The assumption that the housing market is overly dependent on casinos fails to recognize the extensive economic diversification and growth in these other sectors. This broader, more robust economic base provides a more stable and resilient housing market throughout the Las Vegas Valley. Then you have regulated lending practices. Post-2008 reforms have led to stricter lending guidelines. Borrowers today face rigorous scrutiny, ensuring they are better equipped to handle their mortgage obligations. This has resulted in a healthier mortgage environment with fewer high-risk loans. Then there is the supply and demand balance. The supply of new housing is being closely monitored to prevent overbuilding, which was a significant issue during the last housing bubble, while the supply of resale homes continues to be at historic lows. In fact, at the recording of this video, there are only 4,362 single-family homes on the market in the Las Vegas Valley, which is actually up close to 400 homes from just a few months ago. To put the current inventory levels in perspective, a normal, balanced market would have approximately 9,000 homes for sale. So we are roughly half of where we should be. On top of that, demand remains high due to population growth and an influx of people moving from more expensive states. Las Vegas continues to rank in the top 5 of US cities year in and year out people are relocating to, and this is not expected to change anytime soon. Then there is investor confidence. Large-scale investments in infrastructure and real estate indicate confidence in the market's future. Real estate development has expanded to meet the needs of a diverse workforce. Projects like the Raiders Allegiant Stadium, the new Major League Baseball stadium that is set to break ground soon, and numerous other new developments highlight the continued economic investment in the region. So, if you plan on waiting for home prices to drop before buying, you're gonna be waiting around a while, and more than likely will end up regretting not buying what you can afford today. I have spoken to a number of clients who are still kicking themselves for not buying during or shortly after COVID. They thought for sure the Las Vegas market would absolutely collapse. To add further substance behind a stable and growing market in the future, Fannie Mae and Pulsenomics recently published the results of the Home Price Expectation Survey, otherwise known as HPES. It asked more than 100 experts of economists and investment and market strategists what they think will happen with home prices moving forward. In the latest survey, those experts say home prices are going to keep going up for the next 5 years, anywhere from 3.36% to 4.18% per year through 2028. Knowing this, that prices are forecasted to keep going up should make you feel more comfortable about buying a home. And if you're not convinced yet, maybe these numbers will get your attention. Number 2 is I have to save enough for a 20% down payment. The idea that you need to save 20% for a down payment to purchase a home is a long-standing misconception that often deters potential homebuyers from actually purchasing a home. This myth, though widely accepted, does not accurately reflect the variety of financing options available today. There are several government-backed loan programs that allow for lower down payment programs. You have FHA loans, which is the Federal Housing Administration, which again stands for FHA. They offer loans that require as little as 3.5% down for qualified buyers. These loans are designed to help first-time homebuyers and those with less than perfect credit scores to achieve home ownership. Then there are VA loans, which is the U.S. Department of Veteran Affairs provides loans for veterans, active duty service members, and certain members of the National Guard and Reserves, with a loan that often requires with zero down payment, making them an excellent option for those who qualify. Then there is USDA loans, which is the United States Department of Agriculture, which offers loans for rural and suburban home buyers with zero down payment requirement, providing that the property meets certain eligibility criteria and the buyer meets income limits. Now, this loan type is not very common at all in the Las Vegas Valley, as we don't have a lot of rural areas that this loan type is intended for. There are also conventional loans typically offered by private lenders who offer low down payment options. Some conventional loans, such as those offered through Fannie Mae and Freddie Mac, allow for down payments as low as 3%. Programs like Fannie Mae's Home Ready and Freddie Mac's Home Possible are designed to make homeownership more accessible. Many lenders also offer conventional loans with down payments in the range of 5 to 10%, which can be more manageable for buyers who may not have significant savings. The bottom line is the idea you should wait to save 20% for a down payment can lead to missed opportunities in the Las Vegas housing market. With lower down payment options, buyers can enter the market sooner to start building wealth and take advantage of rising property values. Number 3 is I won't be able to find anything to buy. Yes, as we just discussed, inventory is at historic lows, which does make it more challenging to find a home that meets all of your specific needs and wants. But that doesn't mean your ideal home is not available. It just might not be available on the market. That is exactly why it's critical to work with a real estate professional who has a strategic approach and knows how to overcome any obstacles that may arise. In this case, the challenge of low inventory. I have helped many clients find their next home off market with no competition. How? Well, I have created what I call the Perfect Home Finder program, whereby once you tell us exactly what you are looking for. We then invest our own money to go out and find properties that match exactly what you're looking for, owned by sellers that are ready to sell. There's absolutely no charge for this service, which allows you to casually look at a few properties with absolutely no obligation to ever purchase. So yes, inventory may be low, but that is no excuse, at least with this real estate professional, to still finding you the perfect home as you relocate to Las Vegas. And number 4 is you should wait to move until mortgage rates drop. Here is the biggest flaw with this line of thinking. Historically speaking, every time rates drop, what happens with home prices? They go up. More buyers jump off the fence, creating more competition, likely involving multiple offers on your dream home, and thus driving the prices up, which could very well result in a higher monthly payment than if you'd purchase a home at today's current rates. In the Fed's most recent meeting, they emphasized that inflation has remained stubbornly high in recent months and said it doesn't plan to cut interest rates until it has greater confidence that price increases are slowing sustainably to its 2% target. The rate is still at a 2-decade high of roughly 5.3%. Again, this is the Federal Reserve's fund rate that I am referring to, not the mortgage rate. This is a change in stance from the beginning of the year when they forecasted to drop rates over 3 times over the course of this year. Now it's looking like 1 or maybe no rate drops through the remainder of the year. You can never know exactly what the Fed will decide to do with the federal funds rate, which directly impacts mortgage rates across the country. I also wanted to point out that even with rates in the upper 6s is where they're at today, that doesn't mean there isn't opportunity available for you to creatively secure a lower interest rate. Case in point, I just negotiated a 2-1 buy down for 2 different clients that recently moved from California here to Las Vegas. They will have a 2.99% rate in the first year. Then the rate will go up to 3.99% in the second year and 4.99% in years 3 through 30. This was also in addition to the $8,000 in closing costs we were able to negotiate as well. So if you're looking for a real estate professional who has your best interest in mind and will turn over every stone to secure the best possible deal in every financial metric, you know who to call. So if you can afford to buy a house at a specific price point with the current interest rate, I highly recommend you don't wait. However, if you aren't financially prepared for homeownership, no matter what the Las Vegas housing market is doing, buying a house is a bad idea if you don't have your ducks in a row. Well, I think this gives you a good overview of the top myths you hear a lot about when it comes to the Las Vegas housing market. With all the misconception that can cloud your perception, it's clear that the Las Vegas market is reinforced by strong economic fundamentals, a diverse growth sectors, and a broad range of opportunities for various types of buyers. While the market is dynamic and influenced by numerous factors, the fears of an imminent crash, overevaluation, and little to no inventory are largely overstated. Understanding the realities of the market can help you make an informed decision and recognize the potential of Las Vegas as a viable place for both living and growing your net worth by purchasing a home. I hope you enjoyed this video and found it informative. So please like and share it. Please subscribe below and comment if you have any questions or found this video helpful. Also, don't forget to check out our other videos on moving to Las Vegas and the surrounding areas so you can continue to get a realistic sense of what it would feel like to live here in the Las Vegas Valley. So, whether you're moving in 9 days or 9 months, give us a call, shoot us a text, send us an email, or even schedule a Zoom appointment here in the description below. We can't wait to help you make a smooth and a stress-free move to Las Vegas. So, until next time, we hope to show you around town very, very soon.